Welcome to Money Matters with Doug Jones, the personal finance show focused on moving you forward financially. Well, it's tax season. And as tax season approaches, this year I think is going to be more difficult than most years. COVID created some additional stresses on us. We've got CERB payments that didn't have taxes deducted on them. The government's introduced some new credits for people who work from home. And so I believe that it will be a little bit more challenging this year to file your tax returns. So to help us with that process, we're joined today by Marc Graham. Marc's a tax partner at BDO Canada LLP here in Barrie. Marc, welcome to the show.
Hi, Doug. Thank you very much for having me today.
So, Marc, before we get into it, why don't you tell us a bit about yourself and what you do at BDO?
Sure. I'm a chartered professional accountant, and I've been with BDO here in the Barrie office for over 20 years. And I specialize in taxes and helping owner-manager businesses with their personal and corporate tax planning.
All right. Well, I know everyone's going to want to know about how to save taxes and deductions. But before we get into that, why don't we start with who needs to file a tax return?
Yeah, there's a few criteria where you must file a tax return, and it's certainly and obviously if you owe any taxes in the year, and that would also include any CPP from self-employed earnings and or a repayment of your old age security benefits. In addition, if you participate in the home buyers plan or the lifelong learning plan, there's a requirement to file, or if you disposed of any capital property, such as your principal residence. And then there is also the requirements to file where either CRA has requested you to do so, or certainly in the more serious matter where they've demanded that you file a tax return.
Okay. And so, I meet with people who have financial difficulty, and quite often taxes are part of it. And one of the stories I've heard, and maybe you can just make this clear to people, is they say, well, I work for cash. I didn't have to pay tax. Can you educate people that might not be accurate?
Yeah, we also hear that as well. And certainly cash is still considered part of your taxable income and needs to be considered and reported to the government. So, and in fact, there's even been court cases where illegal activity or where you're earning funds illegally, it's still subject to income tax. So there is no way around that part.
Right. Okay. So as we get ready to start filing our tax return, go through some of the documentation we need to gather up to be able to do a return.
Yeah, so it's going to be your typical income slips, or your T4 and your T5 slips, and certainly new for this year, or new for a lot of people, is going to be the T4A slips that you're going to receive to report any of the COVID benefits that you may have received. In addition, you want to gather up any documentation, invoices, and receipts relating to self-employed income or rental income, and as well any deductions that you might be entitled to for donations, child care, medical expenses, and related to medical, such as dental and eyewear.
Okay, so as we're preparing again, last year, with COVID, the tax deadline got extended out. Let's just remind people about the tax deadlines coming up this year for both the T4 employee and then the self-employed person.
Yeah, so like you said, assuming they don't extend the deadline this year, and it's unlikely that they will, essentially everyone's tax return is due April 30th. There is an exception that if you or your spouse are self-employed, that deadline is extended to June 15th. But something to keep in mind with that June 15th deadline is that the taxes that you owe are still due April 30th.
Right. So if you file in June, but you haven't made any of the payments, you're going to be incurring some charges from the April 30 deadline on.
That's right. Yeah, there'll be an interest charge from April 30th until actual payment date.
So let's go over that part of it, because if you don't file on time, there are penalties. So maybe you could go over for people what those penalties are from late filing to the interest.
Right. Certainly, if you are in a refund position or don't owe any taxes, there's going to be no penalty for late filing. That said, it's often very important to file on time, especially if you're entitled to certain tax benefits like the child care credit, where the payments that you receive are based on your prior year filings, and any delay in those filings can lead to delay in receiving those benefits. But if you do owe tax in the year, there are some penalties, and they can add up quite quickly. If you are late even by 1 minute, then it is an automatic and immediate 5% penalty of the balance owing. In addition, there is a 1% penalty for each month after that you've late filed your return. So in a pretty, I guess, basic example, if you owe $5,000 in taxes and you don't file by April 30th, you're immediately subject to a $250 penalty. And then if you file upwards of a year late, there is a penalty of $850 that would be added to the $5,000. So it can very quickly add up and become a significant number.
Right. So the annualized interest rate you're paying on both the penalty and the interest is over what, around 18 to 20%?
Yeah. 17% just in penalties. And then, there would be interest that would accrue on that balance owing as well, which is currently at a 5% annual rate.
So again, the point is we need people to file very, very on time, because it's really expensive if you don't. Plus, as you noted, there are certain benefits you get that are based on filing your taxes. Okay, so how do you go about filing your taxes?
Yeah, there's a few different ways, and depending on how you prepare your tax return. If you've purchased software either online or from a retailer, is the net file option. So that's electronically filing from home. If you've hired a tax preparers, such as BDO, we are authorized e-filers, so we would e-file the tax return directly to CRA. And then certainly there's the tried true method of pen and paper. So you're certainly welcome to fill your return out manually and mail it into CRA. Then new for this year is what CRA is referring to as File My Return. So that's by invitation only from CRA. And if you qualify, they will essentially file your return for you and send you your assessment. So that's really geared towards very basic returns with limited information, such as maybe just employment income.
Well, that's interesting. And I'm assuming that before you elected to do that, you'd want to make certain you didn't have any, credits from working for home this year that would have changed your return.
Yeah, absolutely. It's going to be very limited in what CRA is going to provide you by way of deductions or credits. So agreed, where you have or can take advantage of any deductions or credits, it'll be in your best interest to actually file a return.
Okay. So we've sort of gone over what you got to do and why you should file on time. So now I'm sure that everyone's big concern is no one wants to owe. Everyone wants to get a refund. Right. So to try to help us sort of maximize our chances of getting a refund, what are some of the things we can do? And there's two different forms. There's deductions from your return, and then there's the credits. So maybe you want to go through what some of the things we can do to help reduce our taxable income and the difference between a deduction and a credit.
Right. So as you mentioned, there are really two ways to reduce your tax liability for the year, one being a tax deduction and the other being a tax credit. A tax deduction is a deduction from your income, such as an RSP deduction or childcare expenses, and that reduces your taxable income. So it actually reduces the amount of income that you're subject to pay tax on. And that deduction you enjoy that deduction at your marginal or highest tax rate. The second is a tax credit, such as a charitable donation. And those are credits that reduce the amount of tax that you owe that has been calculated on your taxable income. And those credits are typically limited to the low rate or a 15% tax credit. So you don't usually get as much bang for your buck with a tax credit as you do with a tax deduction.
Okay, so you've mentioned a few of the things. So what are some of the things we should look for that we can get to reduce our income so we pay less tax?
Yeah, the biggest thing for this year, for 2020, is the new home office deduction for employees. And the home office deduction for employees has always existed, but they've made it simpler this year by introducing a simplified method for an employee who was required to work from home during 2020 as a result of COVID-19. So their office closed, their business closed, and they were required to still work from home. In that case, they've introduced a simplified credit that allows you a tax deduction of up to $400 for the year. And that's calculated by $2 a day for every day that you worked at home. So you would have to, get out your calendar, see the days you work from home, and calculate that $2 per day tax deduction up to the maximum of $400. And I guess it's important to note that days off, vacation days, sick days, or days where you actually maybe did go into the office or to your employer's work, those days don't count to that $2 per day.
Now, in calculating, if I go with that $400 approach, that means that I don't have to keep track of square footage of my home that was used for office. What happens if I bought furniture and all kinds of stuff to set up that home office?
Yeah, so as an employee, and as you mentioned, the simplified method is exactly that. It's simplified. You don't have to keep track of any expenses. You don't need any forms signed by your employer. You simply just claim $2 for every day you were working at home. There still is the detailed method of filing home office expenses. So maybe that's where you've incurred other expenses, such as office supplies or other types of equipment that you may have been required to pay for yourself in order to carry out your employment. And in that case, you can then opt out of the simplified method and then file under that detailed method. So that requires, though, getting forms signed by your employer, indicating that they expected you to pay for these expenses out of pocket. And in addition, it requires you to keep track of your expenses, as you mentioned, prorating the available deductions based on square footage of your house compared to what you are using for your home office. So it can be of certain benefit if you've incurred additional expenses above and beyond the typical, mortgage interest, home insurance, property taxes, those types of things. So particularly if you rent your home or your apartment, there's certainly additional benefit to being able to claim under the detailed method.
So maybe you should also go over some of the details that people need, sort of fairly quickly, but just like I see a lot of people that claim mileage expenses, and maybe you should just go over some of the rules on what's required in order to actually file that claim.
Yeah, for mileage, and no different than the home office under a detailed method, it just requires you keeping track of all your receipts, keeping an itemized log of, in the case of automobile use, keeping a detailed log of personal versus business travel. And then at the end of the year, you add up all your expenses, and then you're entitled to the prorated deduction of business use versus personal use.
All right. Well, thanks for that, Mark. So what's going to happen? We got to go to break. But before we go to break, what we're going to cover in this next segment is what happens if you get a notice of assessment back from Revenue Canada that actually indicates you owe money? And what are some of the steps you can take? And then, how quickly, if you can't pay it, what do you do? So we'll see you right after the break.
This program is brought to you by Ignite TV. Now you're in command. Visit Rogers.com for more details.
Everybody knows not to drink and drive, but some people still think it's okay to take drugs and drive. Police have the authority, the ability, and the tools to determine if drivers are impaired by legal or illegal drugs. And because drug-impaired drivers can pose just as great a risk as drunk drivers, they face the same penalties, like the loss of their driver's license, a criminal record, fines, and more. A message from the RCMP, the Canadian Association of Chiefs of Police, and Arrive Alive, Drive Sober.
Ready to move forward financially? Then you won't want to miss Money Matters with Doug Jones here on Rogers TV. This personal finance show focused on getting you expert advice in all matters related to. Welcome back to Money Matters with Doug Jones. Today we're talking about taxes, and we're joined by Marc Graham, a tax partner here at BDO Canada Limited in Barrie. And so, Marc, before the break, we were talking about who needs to file a tax return, how do you file a tax return, what are some of the deductions you can get to try to reduce the amount of tax you pay. But what happens if you file your tax return and that notice of assessment comes out and it says you owe money? What should you do then?
Yeah, great question. And probably the first thing I would do when I got that assessment is make sure it agrees to what I expected. Because often there can be changes and there can be errors that are processed by CRA. So certainly compare that to the return you filed and make sure that is in line with what you owe.
And I've actually seen returns where individuals claim self-employed income, and CRA writes back and says, we denied it all. And then the person said, but why? And so they've engaged. And so there is a process you can go through, right? Where you can engage with CRA, provide them with the documentation to support your claim to, come to a resolution.
Right. Absolutely. And there's two ways that often comes about. There could be the informal process where CRA reaches out to you and asks for backup or supporting documentation to some of your expenses. And the other is a more formal process. So where you have received an assessment or a reassessment where CRA has charged you with taxes that you disagree with, you can formally object to that. And that is done through a formal notice of objection with the Chief of Appeals through CRA.
Right. And I guess when you have a professional like yourself file the return for the person, you assist them in that process and you engage in helping them resolve those issues.
Yeah, absolutely. That's probably one of the biggest differences between, hiring an accountant and versus hiring maybe a tax preparer. There's lots of tax preparers out there who have some general knowledge of personal taxes and their filings, but they're often only around for that tax filing season. Maybe they're working a part-time job or on contract versus an accountant who, they work in the job year round, they're available year round, and they have a much more in-depth knowledge of personal taxes and the laws that go with it. So certainly having a tax accountant or an accountant help prepare your return, they can certainly be available for those inquiries by CRA.
Right. And I think that's a huge benefit because I think a lot of people, when they get that notice of assessment says you owe, they don't know what to do. So having someone they can rely on, I think, helps them.
Yeah. And the timing can be very critical as well. If there is an objection that must be filed, it has to be filed within a certain time period, usually 1 year after the date of filing or 90 days later, whichever of those two is later. But if you miss that deadline to object, you have potentially lost the opportunity to state your case to CRA.
Right, which could be very costly. Indeed. So let's assume that you've gone through all that and you knew you were going to owe, and so the notice of assessment came back and it was in line with what you thought, but you actually don't have enough money to pay it. And, of course, I see those all day long. What does the person do then when they get that notice of assessment that says, CRA says you owe them $10,000 and you don't have $10,000? What course of action should they take?
Yeah, so I guess, first of all, they shouldn't ignore it. It's not going to go away. They're not going to stop asking. So, certainly make a partial payment if you can. And then the second thing would be reach out to CRA because they do have programs through their collections divisions where you can set up a payment program with them. So perhaps you're going to mail them a bunch of post-dated checks that they'll cash on a monthly basis, or you can arrange for or pre-authorized payments through your bank account. So it's important to have that communication and be upfront with them because as long as you're making a reasonable effort to make payments, they're usually pretty good to work with you.
But does the interest stop?
No.
Right.
Yeah, that's one thing. The interest clock continues to build on any balance owing. So the current interest rate is at 5% through CRA on any balance owing. And so if you have the means to borrow on a line of credit, for example, the rate you would pay on a line of credit could be or would be a lot less than what CRA is going to charge you on the balance owing, not to mention you don't have the aggravation of dealing with the CRA collections department.
Right. So there's also another thing that I see, and maybe you can explain to people. I've seen people that were self-employed, didn't make any remittances, didn't file for a few years, got notified by CRA, hey, you're outstanding your taxes. So they filed some returns, and they could be filing 3, 4, 5 years at once. Of course, that creates a very large liability. It incurs a lot of interest and penalty charges. And so they're reminded of fairness. Maybe you can go through what fairness is.
Yeah, so the fairness provisions are really there to help taxpayers who have undergone some financial hardship or maybe a death in the family, a spouse or a close relative. And it's a way to apply to CRA to have those fairness provisions apply to help reduce the penalties and interest on the balance that you owe. So it's really meant to help individuals where they have incurred these taxes at kind of no fault of their own or for matters that are beyond their control. So if you've just blatantly ignored your filing obligation, the Fairness Committee isn't going to have any sympathy for you.
Right. And I think it's important to note that the fairness is dealing with the interest and penalties. It's not addressing the actual principal balance. So that principal is still going to be payable, even if you're able to be successful in some of the interest and penalties.
Right.
Okay, so once you've gone through all of that and you owe some money, I think the one point you made that I hear quite a bit that's really important is you got to stay in touch with the CRA agent. Don't ignore them. Ignoring them just becomes a real challenge. You can get onto the payment plan. Now, how long a payment plan will they generally give you?
It really depends, one, on your balance owing and two, your means of payment. So it is a bit of a process to apply and to arrange payments. So they're certainly not going to expect you to make payments that are beyond your means, but they also expect to have reasonable payments made on a monthly basis. And if you can't meet those payments, that's when they start to look for other avenues to collect that taxes.
Now, when you say they're not going to make you pay beyond your means, how do they know your means? Is there some form I file with them?
Yeah, there is a bit of a process where you disclose, and obviously they know your income from past tax returns, but as well doing a bit of a cash flow projection for them to show what your means for payment are. And in a lot of cases where the taxpayer individual is disputing that with CRA, that's often obviously where we reach out to individuals like yourself to help them with that.
Okay, so once I've gone through all this process and I'm communicating with them and I'm realizing that, I just can't afford to pay this. So then I know that some people would sort of go, I'll just ignore them for now. I know it's not the right thing to do, but can you explain to the viewers what some of CRA's remedies to get you to pay are?
Right. Yeah, no, they certainly have it within their toolbox to seek legal action. And probably the most common way or their initial way of trying to collect taxes is garnishing wages. So they'll reach out to your employer with a formal letter that an amount has to be withheld and remitted to CRA from every paycheck. If that's not an option for them, then they can certainly take it to the next level, which is putting liens on properties and also seizing assets, like a bank account or assets that they could quickly sell to convert to cash to settle your debt.
And I think it's important to note to the viewers that if you owe a person money and they want to collect from you, they could get a wage garnishment on you, but they'd have to go through the court process to get that garnishment of your wages, and it would be at 20%. CRA doesn't need to go through that process, do they? And it's
right.
at 30%.
Yep. Yep, they're just reaching out to your employer, and you're 30% less cash in your pocket.
And the leaning of the house or the properties you noted, again, that gets done from their desk, and they don't need to go through the court process.
Right.
And I am a trustee, so I'm helping people restructure debt. The other thing that's really important to note is that income taxes are an unsecured debt, similar to, say, a credit card. But if you owe income taxes and they lien your house, it just became secured on your house, and you're not going to be able to get that one reduced. So I think there's an important message for people that they should deal with this in sort of a more timely basis. Yeah. Do you agree?
Absolutely. You definitely want to be proactive with your balance owing to CRA and not ignore it, not let it build, because that's the worst case you can do for yourself.
Okay. So I think the important takeaways is if you owe, communicate with them on a frequent basis, try to come up with a reasonable payment plan, recognize that there's interest incurring on that outstanding balance, so pay it down as quick as you can, and don't sort of let it get to the wage garnishment or lien on your property point.
Right. Yeah. And there's one important thing just to note for 2020, if you received COVID-related benefits during the year and your total income is less than $75,000, CRA, and you have a balance owing at the end of the year, CRA is not going to charge you interest. And so there's going to be an interest relief that they will apply automatically to your balance owing, and they won't actually start charging interest until April of 2022. So you do have a little bit of time to make your payment if you have that unexpected tax balance for 2020 because of those COVID benefits you received.
Oh, that's a really good point. So they're giving you 1 year of interest relief on those funds.
That's right.
Oh, that's quite good for people to understand. Okay, so I think we've covered sort of most of the basics about how you file a return and what the information you need is and deductions you can take, and if you owe, how to handle it. So, Marc, before we go, do you have any sort of final thoughts that you'd like to give people?
Yeah, certainly, this year being an unprecedented year in many ways, and taxes being one of them, I would certainly recommend getting your tax return prepared as soon as possible so that you can plan for any unexpected balance owing. Certainly if you, and as we've said, file it on time. Even if you can't make payment, make sure that return gets filed by April 30th. And certainly, again, due to all this uncertainty, reach out to a tax professional and seek advice to ensure that you are maximizing those tax deductions and credits.
Yeah, I think that's great advice. And again, what you noted before too about even if you don't think you're going to owe, get that return done on time, particularly if you're receiving benefits like the child tax benefit, et cetera, right. Because I see people who were slow at filing their returns, and then they get the notice in July that says, by the way, you didn't file your return. In September, we're cutting your child tax credit off.
Exactly.
And it creates stresses for people that they just don't need. So, yeah. Marc, thank you very much for all the insight today and for joining us. For the viewers, hopefully you enjoyed the show. If you have any questions or comments that you'd like to make about the show or suggest new show topics for us, please reach out to us on the Rogers homepage. You can hit the show site and send us an email. So until next time, goodbye, everyone, and thanks for joining us.